Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday, the 29th of November. How fast this month is gone. But tomorrow we have our MarketClub TV show. It's at 5 p.m. Eastern Standard Time. You can call in with your questions right now and leave a question for us. We'll do our very best to get it on the air. That number is 410-867-2100, extension 129. Or you can email marketclubtv@ino.com, and we'll do our very best to get your questions on the air. You can ask about the markets, ask about technical indicators, anything that is related to the market. We'll do our very best to answer those questions on air tomorrow at 5 p.m. So don't miss the show. We do broadcast it later if it's not in the time zone that you want, but check it out. I think you'll enjoy it. But don't worry, December 9th fixes everything. Here are the problems I see in Europe. There are 17 countries involved in the Eurozone who are member states. That equates to 17 sovereignties, hundreds of political egos, plus millions of voters who have to accept the forthcoming austerity measures. No wonder nothing can get done. Now, if that was not a big enough challenge, layered on top of all of that, you have the International Monetary Fund, the IMF, the European Central Bank, the ECB, and the European Financial Stability Facility. Try saying that, EFSF. You mix those three organizations, their egos, with the 17 sovereign countries, and you have a recipe for total inaction and disaster. This, folks, has been going on for over 2 years now. All the players are supposed to have a big meeting on December 9th, which should solve all the problems in Europe. We sincerely doubt that it will. We think it will just be another kick the can down the road moment that will carry everything forward into 2012 with the same problems. As always, we are relying on our trade trial technology to keep us on the straight and narrow and on the pathway to profits in 2012. Okay, now let's go to the charts and the video and see how we can create and protect your wealth for the balance of 2011. So don't forget, give us a call, 410-867-2100, extension 129, and leave your question or message for us, and we'll do our very best to get it on the air tomorrow night. If it doesn't air this coming Wednesday, which is tomorrow, it'll probably air the next week. So don't give up. Or you can email us with your questions at marketclubtv@ino.com. Now let's go to the charts. And we're going right to the portfolio. We're actually going to be covering our other portfolio, which is we'll be looking at the perfect ETF portfolio after this, and also the global ETF strategy portfolio, which will show you what they are. They both are some interesting markets. But let's first of all go to our S&P 500, and we have a plus 75, and you can see basically that's what we're doing. Let's go 6 months. We're on a weekly chart, but let's go to a daily chart to give some more data. And you can see we've had the sort of recovery high here, but I really don't know if we're going to get much higher than we are right now. We're looking at potentially, if we put in a couple of things, we'll put in our Donchian trade channels, and also our parabolic. We like these two indicators to actually see them on the charts. Now, the beauty about the Williams percent R and the MACD, they're trend indicators. Well, the MACD is a trend indicator. The other one, the Williams percent R, is an oscillator. And here you have, these are mainly trend indicators, but it's amazing how you can keep on a line like that, but you always seem to come back into the trading channel. You can see right here, out, you come back in, out, you come back in, here again, out, you come back in a big way. So we've come back into the trading channel. The question is, how far are we going to go from here? Well, one way to measure this is to simply put in our Donchian trade channels. So we just click right here, pull this down. So we would be saying somewhere around the 1220 to 1230 area, 1234 to be precise. These are areas that should present problems for this market, and it's interesting right around these levels here. The 1220, 1218 area is where the previous low was, so that may be another area of resistance. But generally speaking, it looks as though, at least for the moment, we've put an interim low in, and this, in fact, was a 61.8% retracement that we measured. If you remember, we measured this down from this level here, and as you can see, it pretty much hit it on the nose. Let me just sharpen this up a little bit for you. So pretty much hit it on the nose, and we've had a pretty dramatic rally yesterday with supposedly good sales for Black Friday. Whether this continues to remains to be seen. But as we said yesterday, this market is going to have to do a couple of things. It's not going to go straight up. It's probably going to just work itself around here. And whether we reverse and keep going up or come down, it's going to be a big question mark in my mind. But generally speaking, our trade triangles remain negative on the monthly and the weekly, the two big trends you want to pay attention to. And the daily is bullish. So short term, very short term, is a bullish picture, which we're seeing right here. Longer term, there's an overriding bearish factor to this market. So let's go to our next market. And we're going to skip the Dow and the NASDAQ today. We're going to go to silver because I want to show you the other markets we were talking about. So looking at the silver market, we have a minus 85 indicating a downward trend. And as we scope this in a little further, you can see this market is really tightening up. It's for the last 10 days, we've pretty much gone sideways. And I think when you have that type of action, it's really a prelude to a move later on. And but the big picture in silver is bearish. We have a minus 75 score. Both the long-term and intermediate-term trends are bearish. Only the short-term is bullish. And I think the area of support is around 31, and the resistance comes at 32.50. So that's pretty much where we are in the silver market. As you can see, it really hasn't gone anywhere since about September, late September. It sort of stayed in the sideways drone. We thought for a moment it was going to basically roll over. It could well be doing that, but it needs to move out with some conviction, either on the upside or downside right at the moment. So let's go to our next market. And the next market we're looking at is going to be gold. Gold is very interesting. Right now it's in a trading range. You can see that longer term monthly trade triangles are bullish. The weekly trade triangles, which gives us that conflict, is in a bearish mode, and the daily trade triangles are bullish. So you've got this sort of conflict. You can see it's the way the market's going right now. If we go a little closer, and you can see we've had two very, very tight sessions. Really, this is inside the previous day's session so far, and it's just not a clear, strong trend yet. But if long-term traders should remain in a committed position to be long, and intermediate-term traders should really just be out of the market right now, looking for an entry spot should that occur. Moving on to our next market, that's copper. Now, copper, as we've mentioned before, is basically a industrial metal, and it takes a lot of cues from the equity indexes, but the big picture for copper as we see it right now is bearish. We have a minus 75 score. The trend is on the long-term monthly trade triangles is bearish. The weekly trade triangles for intermediate-term traders is also bearish, and only the daily trade triangles, short-term, are bullish right now. That gives you the sort of little rally we've had. This started actually last Friday, which is interesting because it didn't follow the big down move we saw on last Friday. So copper continues to reflect the equity markets. An interesting level to look at today is the 3.4255 level, and I think that's going to be enough to stop this market on the upside, at least for now. So let's take a look at our next market. A lot to cover today. We'll be covering the ETF portfolios that we carry at MarketClub and show you how they work and how you can use those to both globally diversify your funds and also to look at some very specific markets that we think are the four most important ETFs. So stay tuned for that in just a moment. Looking at our next market, this is going to be the crude oil. Crude oil is acting extremely well. It's 99.82, just below the 100 level. All of our indicators are plus 100. This is important because we have no other indicator right now that's plus 100, not even gold. So people are looking to buy crude oil. Of course, a close over $100 I think will be very, very bullish. And you can see with all of our indicators positive, it means that our long-term trends, bullish, intermediate term, and short-term are all bullish. So I think we could see this market move over the $100 level, like close over that level. In fact, today's high so far today has been 100.06. I think if we close over 100, I think it's going to look very, very positive for this market. So really pay close attention to that one. Next market is the dollar index. As you know, we've been positive on the dollar index. We still are positive, and as you can see, it's come back from its levels of support around 78.50. You may remember 78.50 was the previous resistance right here. It's popped over that level, and it looks like it's building a base to regroup to go higher. Only the short-term indicator, short-term is bearish right now. Of course, that reflects today's action. So longer term, the bearish indicator came in yesterday, And that's why these trade triangles are so powerful. They actually can predict sometimes what's going to happen the next day. Not all the time, but sometimes. But generally speaking, we get the trend right, and we get them all lined up like we have in crude oil. Then you've got something really positive going on in the market. So next market to look at is going to be the CRB, the Reuters Jefferies CRB Commodity Index. And that's actually putting in a pretty good performance today. However, our monthly and weekly trade triangles on that are still bearish. We have a minus 75 score. That was actually minus 90 earlier on today. So the bearish is the weekly and the monthly. Only the daily is short-term bullish. We have resistance coming in at the 310.50 area, pretty much where we are right now. So it's going to be very interesting to see if we can hold that level. But certainly, we've just hit a trade triangle today at 310.45, where the market's trading right now, indicating that short term the trend is up. So let's see how that plays out. But to give you an idea of the scores, between 50 and 65 is a trading range. That's how we score things. 70 to 80 is a merging trend. We've got a 75. It's still a negative trend. If this were a plus, if this level was a plus, it'd be a plus on the upside. And 80 to 100 is a strong, 85 to 100 is a strong trend. So we don't have that in this market yet, but we'll pay close attention to it. Now, I promise you we'll be looking at some ETF portfolios, and I'm going to do that just right now. We have the MarketClub's perfect ETF portfolio. These are the signals we give you every single day. And as you see, we're already long on the USO. This is an ETF. It's one of the most popular ETFs. Currently trading at 38.5. It's up 65 cents for the day, up 1.71%, acting very, very well. And on the, so here you have four markets, basically the oil, the euro, gold, and equities. So the four major markets as we see them. You're obviously long this market right now, the USO, long crude oil, which is the way you should be. You're in this market, you're out of the market right now. So you're in a cash position, and the market's not acting that well. So it's a minus 90, so you've got all your trade triangles. So you don't want to be in a market that's going down. If you're trading this with your IRA or Roth 401k, basically you don't want to be in this market right now. So going back to our portfolio in the gold, looking at the gold market, I can tell you right now we're long gold. If you're a long-term player, from 139.54, the market's 166. If you're not a long-term player, an intermediate-term trader using our trade triangles, you should just be out of this market. You wouldn't be short, but you'd just be out of this market, waiting for this indicator to go green to get long again. So right now, out of the three positions we've talked about, you're in cash in two of those positions, unless you're a long-term trader. And if you're in the S&P 500, you'd be pretty much out of this market right now because all of our indicators are red. So out of the four markets we've just talked about, three of those you would not be in. You'd be in cash position. The only one you'd be long right now is the USO, and that's what makes this a very powerful, easy to follow portfolio. It's the perfect ETF portfolio. That's what we call it, and you can track it every day. We give you the exact signals in these markets every day, where to put your stops, where the market's headed with our trade triangles, and all the information you need to trade these markets successfully, these ETFs. So let's go back to our next market, and this is MarketClub's ETF, Global ETF Strategy Portfolio. And we are covering this, the BRICS, we call it the BRICA. This is Brazil, Russia, India, China, and Australia. And you can see with our scores, minus 85, minus 75, nothing that really should be looked at right now. But let's take a look at Brazil. It's a very popular country. Let's put a little, what I see here potentially is a potential for a head and shoulders base. This would be the right shoulder. It's not there yet. We still have our negative indicators here, but I want to wait and watch this market very carefully, because if we're right, you could see a nice move in this market to the upside. So let's see how that plays out. And this is pretty much the sampling of the other markets that we're looking at. Going to Russia, similar pattern, not quite as bullish in my mind. Also with India, certainly a different pattern. We're making new lows here. This is not a good sign in terms of a trend. If you want to get long, it's down, and it's long and wrong right now. Basically, you'd be out of these markets so far. So even with a global strategy portfolio, you'd still be pretty much in an all-cash position. Now, this is the market, the Xinhua China 25, the FTSE Xinhua China 25. You can see it's basically building that base. Really want to watch that market very carefully. To me, the big level is 40. If we go over 40, I want to definitely be long in this market because it would indicate that we are going to see this market trade up to 50 and possibly higher. Have we been there before? Well, you just can see we've been up to these levels. We've definitely been up to the 55 level. If we go max here, you can see we've been up as high as 70. I think certainly the 55 level is doable. This is, by the way, that was the big crash in 2008. China was not immune. I'll take all these off for you so you can see how it came down. Generally speaking, it looks like it may be trying to make a bid. Too early to tell yet. We want to see more proof on that one. And lastly, we want to look at the Australian market. This is the EWA iShares MSCI Australian Index. As you can see, this looks like it's building a nice potential head and shoulders. This will be the right shoulder. And let me just pencil it in for you so we can see what I'm talking about. So here we have the, very quickly, just the markets. Let me just take this off so we don't have the chart studies. Oh, okay, so here we are looking at this market just very quickly. It looks to me like you're, oop, I don't want that, so let me just take that out. It looks to me like you're building a potential head and shoulders here. If we see this market go over the, certainly the 25 level of convincing way, maybe like this, and then go up like this, there's a very strong pattern to carry this market higher. So I'd pay very close attention to Brazil, China, and Australia with our ETF portfolio. This is the global, MarketClub's global ETF strategy portfolio. It's available to all members, part of the package, and you really want to check that out every day. So here we are. We're going to be looking at the markets. Ask MarketClub. I'm going to take that off. You don't need that little scratchy stuff on there for now. But if you have time, tune in tomorrow night, 5 p.m. Call 410-867-2100. Leave a question for the show, extension 129, and we'll do our very best to get it on the show tomorrow. Email us your questions at marketclubtv@ino.com. Hey, this is Adam Hewison. It's been a good time with you guys today. I hope you got some good information about those ETF markets. And we'll be back tomorrow at 1 o'clock. So I'll see you then. Have a great day trading.